You're with us here on a fresh new edition of Trading Hour. It's 11 o'clock and the market is up and about 75 points higher. So it's a good-looking green screen, a good day for bulls. But this comes after the last, 8 or 9 days in which the market has ended lower every day. And it's been a pretty disappointing streak, the worst in actually the last couple of years. So we are getting a bit of a bounce. Let's see if this lasts. I guess too early to say if it will, but it is entirely possible that after this kind of a sell down for the last several days, that this might actually stretch on for a couple of more days, given that there isn't any bad news from the global arena. Locally speaking, news has dried up completely, essentially a news which will give direction one way or the other to the market. Earnings are behind us, a lot of analysis is on. But there are global wildcards. Oil, for example, we started the week with oil starting to go up. That's bad news. There is, of course, this not political uncertainty, but markets are still awaiting in what shape or form will India retaliate to the Pulwama attacks. Could come any day. Will it happen now? Will it have to wait? We don't know. So, I mean, those things are there, but otherwise it's practically, in a way, triggerless. Going into the elections, which are still some time away. For now, 80 points after many, many days of bad days. Ekta, morning.
Yes, Prashant, morning. Well, we do have the Fed minutes which will be coming out, so maybe we'll get some amount of cues from the global space there. But separately, like you mentioned, yes, definitely we've broken that 7 to 8 day losing streak that we've seen for the Nifty. So let's see whether we manage to maintain it or not. Yesterday also, most of the trading session was in the green, and then we lost out in the second half of trade for the Nifty and the Sensex, and overall it was a mixed close. So let's see whether we manage to maintain that sort of momentum in today's trade. But otherwise, positive advance decline ratio on our hands. So it stands at around 2:1 on the Bombay Stock Exchange. 1,150 stocks advancing to around 575 stocks declining. Lot of stocks to discuss, and I think based on news, it is the entire ADAG pack which really deserves mention at this point in time. So if you pick out any of the stocks, Reliance Communication, Reliance Capital, Reliance Infrastructure, all of those stocks down anywhere between 6 to 8% and separately a couple of other stocks buzzing around include Vedanta, which is up around 3.5%, Dr. Reddy's, which is off the low, and maybe Ashok Leyland. The company spoke to us. We'll get some management commentary later. So that stock higher by around 2%. Sudarshan Sukhani joins in this morning to discuss the markets with us. Sudarshan, over to you then. What would you recommend for the Nifty? Are you seeing this sort of momentum sustained today?
Good morning. Well, the momentum seems to be sustaining. Our recommendation is to buy the Nifty and the Nifty Bank, expecting a 2-3 day rally. We can't time it, but expecting a rally of some kind, at least a relief rally. So trade the Nifty on the long side, keep a stop at 10,620. The stop is also very important for so many reasons, including what Prashant already explained, that the markets can, get a unexpected news item anytime, any day. So keep a stop, but trade on the long side. That view continues in the stocks that I'm recommending today. Consider buying Britannia. Britannia is a good quality stock. It's fallen, it's come to a support level and is now bouncing back. It's worth going into on the long side. Tech Mahindra has been an outperformer. I think we should go for it and continue with the theme. It's likely to have some more momentum on the upside. And ICICI Bank is the reason, ICICI and HDFC Bank are the reasons why the Nifty Bank is up today. Consider buying ICICI Bank also. So 3 buying ideas: tech, banking, private banking, FMCG, and a broadly cheerful market.
Okay, we've got some questions, Sudarshan, for you. So this is on IOC. Ronojoy holds 100 okay, I think he holds some shares of IOC at 149 rupees. The cost is 149, and he wants to know whether he should hold or sell. Your sense on IOC, oil marketing, Sudarshan?
Well, I think you should sell. There's no confusion on that account. Just sell the shares, switch if you want to stay in energy and petrochemicals. Reliance, even Petron LNG are 2 excellent options to invest in. Switch from IOC to Reliance and Petronet, but get out from here.
Okay, thanks very much, Sudarshan, for that. Appreciate you joining in on the top of the show. We'll have more trades advice in a bit, but let's just focus on the market for a bit, and I just want to highlight a few names I mean, metals, as Ekta also pointed out, are all doing well. JSPL, Vedanta, SAIL, Tata Steel was up and about earlier. So, I mean, that's one pack which is doing well. Outside of it, Shriram Transport Finance, maybe we should put these up. 1,037 on Shriram Transport. Cummins India is up about 3.33%. There is Graphite, which is up 3%. HEG is up 3%. IRB will come up. IRB is up 8%. I mean, 121 or so. KPIT Limited is up 5. There is Edelweiss, which is up about 3.5%. And there are names like Minda Industries. Minda is actually up 8.5%. 311, and then there is Sonata Software, which is up about 4-5%. You go down the list, volumes kind of start to dry up very, very fast, very, very quickly. One name which has had significant moves last couple of days is Tejas Networks. So I just want to, last name I want to mention. Volumes are low on this one. For now, it'll pick up, but it's up 12.5% as we speak. I think it was up 10% yesterday, but then it had a big sell-off before that.
I just want to point out on Page Industries, in fact, that stock is down another 5% today. It's not that much in terms of volumes, but there have been those disclosure concerns. So I think that seems to be acting up again. So that stock is down around 4.5%. Remember, it's lost around 18% on a year-to-date basis already. So that's on Page. But nonetheless, let's move on to a CNBC TV 18 exclusive then. We understand that the government is likely to issue a next tranche of PSP recapitalization bonds very soon. Sapna Das joins in with more details on this. Sapna, go ahead.
Hi, good morning. So, as on expected lines, the government had taken a nod for an additional recap also this year itself. So, there is a lot of money that still remains in the budget. Looking at the overall growth momentum among the public sector banks, particularly, the Q3 results have been far better. But, the broad principles basically are that you need all banks to maintain regulatory capital, number one. Number two, you need to make sure that, some of the banks which are on the threshold of entering the PCA, they are well capitalized. And number three, also in terms of, kind of assisting some of those banks, for an early exit from the PCA framework. Some developments have already happened on 31st Jan. Bank of India, Bank of Maharashtra and OBC are already out of the PCAF. The likely next candidates, everyone that is speaking about is Allahabad Bank and Corporation Bank. So that concern also needs to be kept in mind. And last but not the least, even the banks which have come out of the PCA framework, they also need to be strengthened and, made sure that the growth momentum continues. So keeping all of these broad principles in mind, the government most likely is going to issue bonds worth around 47,000 crores. They have a tentative budget already of around 53 to 55,000 crores for FY19. Probably some part will be kept aside, as a cushion if required. But this is a broad number that I'm given to understand that may be fused. 12 banks are the ones who will be getting the money, out of which big banks would be Punjab National Bank, most of the other PCAS banks, and that's the way the story goes. So you just have to wait for the notification to come out. Probably the government would like to, put out some kind of a, announcement release or, some tweets as well.
Sapna, thanks very much for that. Appreciate you getting us those details.